What is up, everybody? Happy Sunday. Welcome to the Sunday Open. I am your host, Nick. How is everybody doing? How did we all get along this past weekend? I don't know about you guys, but I took a much needed day away from trading on Friday, and I feel very blessed that I did not even bother to get involved with whatever we want to call the price action on Friday with the OPEX shenanigans and the very minimal range that we pretty much traded in and consolidated in for a number of hours. I did, in fact, and I will say this, I give a lot of credit to anybody that works a full-time job from I guess from home, like actually works from home and full-time takes care of their children as well. I had the lovely pleasure of doing it without my mother-in-law on Thursday and Friday and trying to stare at charts, trying to find trades while still navigating in between nap time and bottles and all the other fun stuff that a single parent may do in a given day. So cheers to them. I did it on Thursday, realized it was a huge mistake, and decided just to take Friday completely off and not even press a button. So hopefully that continues. I think that is a number of things that as a trader, I'm still kind of getting used to, especially as I evolve into the next chapter of my life that it currently is. So without further ado, let's take a look at the charts, shall we? For those of you who may be new or have never tuned in or hung out with me on a Sunday, what this show typically is us diving into the big four, maybe even some YM here and there, talking about what's maybe on the docket this week as far as data releases and everything else as far as earnings. Earnings season is back in full swing this week. So if you're a single stock trader, this is one of the first of many Super Bowl weeks for you where there are plenty of opportunities for you to trade on based on earnings or play the short dated options game, whatever it is that is your bag. This is a good week for those people. So we'll talk about that as well, but hopefully do a little light prep on ES, NQ, GC, as well as the lovely liquid gold that is crude oil as well. So we'll talk about all those and hopefully give you guys a good idea of at least how I'm taking this week on, what I'm looking at. And we'll also recap a little bit of the last couple of weeks. Just give us a good understanding of kind of where we are trading, where we may go, and how this week may unfold. But before we jump into this week's plan and where we may open here on this lovely Sunday evening, how did we all do last week? Just looking at this, kind of looking at what was looking like it was going to be a very balanced week inside of the last couple of weeks of structure. In fact, on ES, just to further articulate this potential new balance range that we are trading all-time highs is always going to be difficult. And you're always going to have weeks and months even that kind of can just look like a multi-week consolidation in the grand scheme of things on the longer time frame where we are just balancing basically within about 100-point range on something like the S&Ps. So what I did is I basically drew the last 3 weeks of volume here as well, just to further articulate this now, what I'm calling a balance range that we are currently trading in, albeit closing at the what is probably going to act as a bit of resistance if we get some more volume into the early parts of this week. But that big round number sitting at 6,300 on the SPX chain, we poked above it on Thursday and Friday, and I've settled basically right around that spot. So no surprise on an OPEX Friday, that's basically where we kind of ended up and just kind of consolidated closely around. So I don't know about you, but this stuff the last couple of weeks, I mean, it's super frustrating. It's hard if you are, I guess, a short time frame trader and you're trying to find and capture a decent amount of points in a short amount of time. This is just going to make you bang your head against the wall. In fact, as a kind of joke last week, just because I expected us to kind of continue to just slowly drift and grind higher, I placed my pivot as if you guys remember last Sunday, and you guys can go back and look at this, I did place it at almost exactly 6,200 on the SPX options chain, just knowing that it was options expiration week. And if sellers were really going to show me anything, I wanted to see any sort of momentum to the downside below this magic blue box that I drew 4 weeks ago almost now. and below my pivot line here that was sitting at 62.40s on ES. It's the same thing. It's the summer trade. There's not a lot of volume. We seem to not get any sort of downside momentum. And this goes back, I mean, even to when we started this show, and I don't even know if I have enough volume at this point, but you know what, we won't even go there because I know for a fact I don't have not as much volume, as much data going back to when we were trading at the Liberation Day lows kind of thing back then. But I was going to articulate what this rally really has looked like, which is just absolutely just kind of locking you out if you were trying to be patient and wait for it to really be confirmed. And I know we're well beyond that, but the amount of kind of gap ups and, not returning to kind of clean up some of that structure that we've seen, it's exactly what you would expect in this kind of frustrating summer price action where we just continue to march higher, make a new all-time high, then have periods of consolidation like this before what is possibly going to be the next move higher, if it does come. But if you're a fan of seasonality, this is where if sellers want to show us something, I mean, this week and next week and into not necessarily this week, but in the next couple of weeks, as we kind of meander into August, it's kind of their chance to get any sort of momentum to really start to clean up any of this poor structure and these gaps that we still kind of have going as low as even 5700s. And we've just kind of left all of those RTH gaps, those even those Globex gaps that we've seen from the futures contract, just continuing to leave them behind and march higher. So for us to clean up any of this in the shorter time frame of the next few weeks, you really need to see momentum start to pick up for anybody potentially taking profit, which just has never happened. It just continues to be the summer trade. And I'm very thankful as a trader that's doing this full time, is gaining more experience into how to actually navigate this. It's a good reminder for me where last summer I was trying to catch big moves. I was trying to be on the right side of this several times, and it worked out when I was looking for longs, and it slapped me in the face several times when I was trying to call top and short the all-time high. It just never works out successfully for a lot of the shorter time frame traders trying to call any sort of top as we continue to march to an all-time high. So where does that leave us for this week? Well, not a lot has changed from even last week's plan where, yes, we are trading above the previous week's range. In fact, we're kind of closing. We're probably going to open right around, I would imagine, where we closed on Friday, being this kind of little low volume node from last week, sitting right here, basically between kind of 35s and 40s. I would imagine we're going to trade. I mean, unless somebody can prove me wrong and there's going to be a gap up or gap down. There really was a quiet weekend. So I'm not expecting too much out of this open outside of probably closing somewhere around settlement from Friday. And then we'll kind of gauge from there. I would not expect a ton of fireworks here this evening in the old indices, but hey, I've been proved wrong several times. But it's another situation where we do start having the initial releases of some of the Mag 7 reporting this week, as far as Tesla and Alphabet. So Google and Tesla will be reporting on Thursday in the after hours. But with the earnings season, kind of the bulk of the earnings season on deck over the next couple of weeks, it'd be hard for me unless we see, as always, it just seems like this market will shake off anything. But any sort of poor earnings from them, I mean, maybe gives us a little fuel to the downside. But in the early part of this week, as the market is waiting to digest those earnings and some of the bigger names that are reporting later in the week, I would expect more of us consolidating in the same range. That's at least how I'm looking at it. So I'm looking personally to kind of play to the short side if we do get some momentum. If we do see sellers offering in these kind of 63.35 to 63.40s, maybe looking to take some stabs short for this kind of, I know we had volume that traded up here, but I'm kind of gauging even the value area high kind of sitting in that general area, at least where I would mark it. So looking somewhere here, possibly for that value traverse back down a little bit lower. But for me to really be looking at anything outside of intraday scalps to the short side, I'm still in the camp where until we clear this big round area where we just kind of wick down to inside of the 62.40s, but this 62.50s, 62.40s that I drew this box now almost a month ago is still going to act as likely support in the shorter time frame. So for me, to look for anything outside of maybe just feeling like we got way too frothy and I'm looking for a longer time frame swing short. Maybe like as we've just moved up almost 25% without any sort of 2 to 5%, correction where we just start to clean up some of the structure. Not a really bearish case, but just a cool off in this. Like outside of me looking for that over the next couple weeks, without us getting too much momentum below this, it's hard to be too bearish right now. Obviously, we still have so much headline risk with what's coming out of our lovely fearless leader of the free world. But outside of, kind of the continued tariff conversations and potentially the deadline that is, tariffs going into effect on August 1st, there's really not a bear case. Nothing I'm looking for too much to the downside. As much as I want to short this big of a move that we've seen off the Liberation Day lows, there's just no momentum behind it. There's nothing I can see from sellers. Every single time they get any sort of momentum, like even like this, it comes right to where you would expect it to find immediate buyers, and we just V out of it and then never look back. So that's really the case. It's just, you kind of want to just be patient and wait for the right long instead of trying to short this thing. I know shorts are fun. They happen fast and we can make a lot of money in a few minutes at times. But what I've seen and what I've digested over the last few weeks of me kind of not necessarily sitting out, but just taking my points and calling it a session, is there have been some great longs. If you just are not, if you're not looking for the short, if you're looking for the dip, the area that where it makes sense to potentially step in and try to join on with some dip buyers, there have been plenty of opportunities. So we'll pause there and we'll watch the open before we jump into NQ and everything else as we always do. But give me your predictions in the chat. Are we going to gap down? Are we going to gap up? Are we going to open right around settlement from Friday? If I had to guess, it's probably what's going to happen. But it's good to see everybody. Thank you, everybody, for hanging out with me on your Sunday evening. I know there's a lot of better things we all could be doing with our time than watching the Globex Open here on a Sunday evening or Monday morning for some of our traders that I know do hang out in the chat that are in New Zealand, Australia. I think we had somebody. I think somebody was in Asia. Was it Japan? I can't remember what country, but somewhere in the Asia Pacific, somebody else was hanging out there too. So it was cool to see all the different time zones as we were leaning into the Sunday Open for our markets. So thanks for hanging out, everybody. Good to see you, Chris, Jim, everybody hanging out. Always fun to have the NinjaTrader crew hanging out in the chat too. So we've got about 90 seconds before we open here. So let's get some predictions. I'd love to hear from everybody. What are your thoughts on this week? Is this the window of weakness that possibly gives us the cool off from this never-ending march to a new all-time high? It seems like almost every few days. Chris thinks gap up. I'm going to lean into just around settlement, which previous day close on NQ was right around 225s, and on ES, let's see if I can get my other chart to load. Sometimes I hate when I don't do this before I jump on air, just get all my other charts on my other screens so I can look at everything too in the shorter time frame as well. Everybody says gap down. It's probably going to rip faces off. We've seen it before. But I feel like the last couple, I know we had the gap down last Sunday, but of course that was immediately corrected once again. Anytime we get that weakness, it just seems like buy the Sunday gap down if you have the stomach for it, and eventually you will be green. But we'll see when that regime changes, I guess. For the time being, it's still very much is I'll buy the dip, even the gap down on Sunday. So we're coming in here 5 seconds to the Globex Open. Well, we're going to watch it on my execution chart on ES. Let's see. Looks like we didn't even gap down on ES. Just opened right around settlement. NQ had a very, very small gap up. That looks like it was already closed. So if you've been hanging out with us on Sundays for the last few months since we've been doing this show on NinjaTrader Live, this is about as boring of a of a Sunday open as we've gotten. So no popcorn for us tonight thus far. Very, very quiet Sunday open in ES and NQ. So what was the opening tick? It looks like on NQ, your weekly open going to be sitting right around 233 and a quarter, 233 and a half, excuse me. So basically was Friday's value area high was the opening print on NQ. On ES. Did my chart load? It did. Week open going to be sitting around 36 evens. We'll call it that. Okay, so Chris says NQ technically did gap up. I thought I visually saw that, but it looks like it was filled so quick. I was not sure. So thank you, somebody that is smarter than me, once again confirming that stuff. But yeah, those are your weekly opens on the two major indices. So ES at 36, NQ going to be at that 233s. So as always, it's something we always talk about on Trade the Close, but it always does tend to act as a decent pivot for traders that do trade more intraday, like a lot of us do, to kind of use to guide you as far as who's on the side of momentum. Is it sellers are in control, or is it buyers? So I continue to use it as a part of my trading to kind of gauge at least the shorter time frame trend of the week as far as momentum, and potentially act as a support and resistance type pivot. And also keep you out of bad trades. If we are kind of meandering below it or above it, maybe just sit it out and wait a little bit. So we'll see from there. But as far as I said, for my plan here, if we continue to see any sort of weakness kind of below that 63.40s, I'm looking to potentially get that balance range, that traverse of value to the downside, possibly down here towards basically inside the 6,300s. I'd be looking to kind of ride this into the 90s, if not the 80s, a little bit lower, but kind of using this last couple of weeks. And I'm treating this as a balance range, at least in the early parts of this week. We'll see. So if we can hold under this, which, like I said, even going to Friday, I know that Friday was OPEX, so a little bit of a grain of salt as it kind of transpires into the early parts of this week. But knowing that was such a high volume strike leading into the July OPEX close at 6,300s, providing a bit of resistance, at least for the last couple of weeks. That's kind of where we ran out of steam. And in the previous 2-3 weeks, whatever it is, going back at this point, but going to take that seriously and know that, we kind of pierced above it, fell back in. So if we were to continue to see any sort of selling momentum below that spot, just knowing the last couple of weeks of volume, I'd happily look to ride this at least to kind of the 63.10s in the early part of this week. But for the most part, as I was saying, just given that we are kind of in balance, given that we're all-time highs, it's hard to get too bearish until we kind of get below my magic blue box that I'm just going to leave there until we return to it, or until it makes sense to remove it and delete that in my pivot at this point, which is going to basically be the bottom of this balance range. So until we leave balance, it's hard, or excuse me, until we leave it to the downside, it's hard for me to want to get too bearish or too in the weeds with anything outside of an intraday scalp to the short side. And it's worked well for me, just kind of treating my trades to the short side as quick, get in and get out, take the profit, and potentially call it a day, because every single time we get any sort of momentum to the downside, it just gets bought. So holding those shorts longer than a few minutes at times just seems like it's a fool's errand. But it's been a kind of that summer, guys. I mean, we just shook off. I really do. This is just, when you really think of this, of where we were trading in like March and April, post Liberation Day, and how fast we've recovered, and now everything's fine, and now we're back to all-time highs, and it's in the middle of summer and the summer doldrums and the low volume. It's hard to want to fade it. So NQ had a little bit more of a, I would say, constructive move to the upside last week, but for the most part, I'm still going to kind of be watching this 23,100 spot as not necessarily a pivot for me with NQ, but where I'd be looking for buyers to definitely step back in to prove that we're going to continue this march to 24,000 and a new all-time high and everything else. Looking at ES, even that same general area that is kind of that magic blue box that I keep joking about. But that does kind of coincide with the previous week's low as well as the month open for July, which still seems to be acting as support for the time being. So the same thing in NQ, and I know the way NQ moves. I mean, anything to the downside seems like it's going to be positive momentum, and just the violence that NQ can kind of give us to the downside, to the sell side when it does get that momentum. It's the same thing though. We just kind of came right back down to the previous week's value area low, the month open, and then immediately V'd out of that. So it's just super hard, once again, to get any sort of momentum behind shorts. It just seems like everything continues to be bought. But if I'm looking at this, if you were to see any true downside momentum, the first place I'd be looking for buyers to potentially step in is going to be right at this, these old wicks going back even for the last couple of weeks. And that is the top of this lovely balance range box that has been auto plotted for me by the OFL tools that I do use to draw my MGI and even spit out some of these magic boxes for me. So first place you probably are going to be finding buyers is right around there, potentially defending that 23,100 spot, which did act as a bit of kind of a pause at times, even when we got back up there. I think it was Thursday. Maybe it was Wednesday. I don't know. I didn't really trade much Thursday and Friday. I was very, very distracted. So, I'm actually, like I said, I'm very thankful I stayed out of those last kind of day and a half at the very least. It just was not the greatest, most fun tape to be sitting there trying to execute on. But for the most part, even going back to the area that, I don't know if it was it last Sunday? Maybe it was 2 Sundays ago, but we were talking about this 820s spot as well in NQ. But basically right around those lower 800s, I'm going to probably be trying to take a stab long once again with possibly both hands, just seeing if the entire kind of bottom of these last 2.5 weeks of range continues to have any sort of, legs. If you lose that, it's very similar to us losing kind of that 62, 50s, 40s area on ES, where the wheels may come off and we could be talking about us actually, falling back into some of these old areas, perhaps filling in some of these RTH gaps that just seem to go on forever if we're going back to the last month or so of price action. But for the most part, it seems like buyers are going to continue to defend. And with 2/7 of the Mag 7 reporting, is that the right fraction? Yes, 2/7 of the Mag 7 reporting on Thursday, it'd be hard for me to assume too much downside, at least until Tesla and Google report on Thursday, to see us, get a real tremendous move to the downside. I would expect possibly if there was any sort of weakness in those names, then maybe that's the fuel we need and that the NASDAQ needs to potentially actually lose this balance range. But in the event that it's positive, I would imagine we start our next leg higher and actually leave this balance with some force coming out of the early part of the Mag 7 earnings. So, but the areas to the downside that I'm just keeping an eye on to watch, like I said, if we were to lose this 800, I am probably, it's one of those where I might take that stab long if I see things on order flow and on the tape that makes sense to show me that buyers are trying to step in there. But if we start to lose that, I, don't even know if I don't think I'd be the first person to try to knife catch at 22,600. I would imagine we probably make a nice move back down to, these, this old area that I think we were talking about, just because this spot goes back to the previous all-time highs from kind of February and January when we were trading in a range, basically sitting around this 22,300 spot, which was acting as support, was acting as resistance, and then we kind of just meandered around it. So I would expect if we were to lose that 800s, we'd probably do rotate about 500 points lower potentially, and might find some buyers stepping in, which is also coincides with basically June's value area high as well, kind of in that 240s, 245 area. So for the most part, I don't have a bearish case. much of one at the very least. I'm just kind of using volume to guide areas that make sense. And if you were to lose them, where's the next place we would logically find some buyers stepping back into this market? But for the most part, guys, it's just hard to want to fade this. I know we all still try to catch shorts, even though we are meandering at all-time highs. I get punched in the face with it a few times in the afternoons. I think I did last week. Is that slow? You get these moments of like slow, grindy consolidation, and then you get that end of day move, just punch higher. And we've also seen the counter of that, where you get that kind of meandering around a specific point in the afternoons, then you get an end of day liquidation. So you see both sides. I just feel like I've been on the wrong side of it the last few trade the close sessions, trying to short ES, which just is, for some reason, has not worked well for me, at least in the afternoons recently. So we'll see. But for the most part, it's business as usual. We're trading at all-time highs. I'm not looking to try to call top. I'm looking to get on the side of momentum if we do get any to the downside. Otherwise, trying to find the appropriate dip to ride this train higher, trying to take advice and continue to watch Stowe do it. And he's still one of the best of people that I hang out with daily, that just finds ways to buy the all-time high and just continue to sell it higher. So trying to will some of that into my own trading as well. And as I'm going through this, guys, as always, if you have questions, if there's anything you want me to dive in a little deeper on or add clarification to, or if there's any questions about me, my trading, my story, feel free to throw them in the chat. Always happy to answer them. We will have plenty of time towards the end of tonight's show as well to answer some of those questions if there are any. But for the most part, as we're going to dive into gold and gold and crude here in a couple minutes, for the most part, we're still trading very much around that 63.30 spot. NQ has not moved a whole lot. As I said earlier, still very much a lackluster open to start this Sunday compared to what we are used to. So nothing to do. If you've already traded this, good for you. But we'll jump over to CL, which is still in the range of death, going back to the same general areas, going back to this time last year when crude continued to trade in the same range. For the most part, this bounce range between 67s and 65s seems like it's still holding. In fact, if you're looking for this potentially to break out and make that move up to last month's value area high up here towards 70s, which I think was the trade we were talking about last Sunday, and I got that glimmer of hope in the early parts of this week that we were going to make that move. I saw this like Monday as I was kind of coming in and just kind of laughed. And then, of course, if I was like, all right, this is the breakout, we're leaving the balance range, just of course, it gets absolutely just smacked in the face and returns to an area of higher volume, back to kind of the value area low of the last few weeks, basically, right around that kind of 65 evens mark, and is slowly makes that next attempt on Friday to kind of push back out of balance and falls right back into it. So it seems like range rules still apply. And I hate crude oil. It just does this, guys. I know I make this kind of joke because this same type of trading and range and balance was the same exact thing kind of at the end of last summer into August as well. And it makes me frustrated, but it also reminds me, I know we always try to, look over the fence and the grass is greener sometimes as ES is just having a day like it is on Friday. And it's like not a good trade. Well, are you looking at other asset classes? I would love to say that I am. And this is always a good reminder that when I do that, it doesn't necessarily mean the other thing I would trade, which is probably crude, is doing anything better at times. And I know intraday that changes, but on the weekly, as we look at this on the 1 hour, like you're trying to play the edges. You're trying to find, I guess, the right opportunity. And until we kind of leave this balance, I mean, as much as I want to see us go traverse the wider side of this range and go up towards 71s, perhaps as a breakout of this, it still seems like somebody is going to continue to reoffer at 67, 68s, and it just makes me want to stay away. So unless I was able to get a good long down here towards kind of the 65s, and I know even the 66 is where we kind of opened to start this week, a decent area if it holds to at least take stabs long at the rotation, maybe another attempt up here towards 68s. Kind of makes sense, but it's just, I'm just not a great range trader is what I've learned about myself. The more I cover and talk about crude and the more I talk about GC just being in an ever ending range, I just can't seem to find a good opportunity or I guess something intraday that I really want to do, versus look at the SPOOs or look at the NASCrack and actually get me away from scalping 20 to 30 points at a time in NQ. It just seems easy compared to me, I guess, forcing me to be patient or waiting for a wider move to potentially play out in crude or just looking to try to be on the right side of one of these. It's just tough. So looking at this, I mean, it's honestly, it's a range trade, guys. I would say you've got a decent long if the week open kind of holds here around 66, but you've got risk down to kind of the 65 30s, 65, probably even the 65 10s, if we're being honest, as kind of your risk, to the downside if you were trying to take scalps long and kind of playing the other half of this range. Obviously, the elephant in the room is still that in this larger balance that we've been in for the last month, there's still that opportunity where if this reoffer still continues to come in here at 67s, that we may see that full traverse of value down here towards kind of the 64s. I mean, you saw it in a part last week coming down here to 64.20s, which marks kind of last week's lows down here. Perhaps that was the attempt to go retest the bottom edge of this value area, balance area. And now we're making the rotation back up. So looking at it, I guess not very confidently, but for the most part, I'd be looking to still take stabs long around 63, probably with a stop, somewhere kind of below the 65, 80s, knowing if you lose that, there's a chance we're probably coming back to the value area low from the previous week down here towards 65 30s, which also basically was the point of control of the last few days as well. So that's how I'd be looking at this, but I don't like being bearish crude. For some reason, it just doesn't feel right to me versus me trying to short the SPOOs. I mean, I'll happily do it at any time, I guess, but something about me just never likes to play the short side in crude oil. It goes back to when I was trying to learn how to trade this or watching it. It seemed like I was always looking for longs instead of looking for any opportunity to short crude. It's just something about me, I guess. I'm wired that way. But I will happily step in front of the freight train that is the NASDAQ at any point if it makes sense. But for some reason, I just have trouble pushing the red button on crude, which so I guess I always look for longs. But when we're trading in a range, I mean, I guess it makes sense. You can at least take the stab there. If not, you look to see, do we continue to see buyers stepping in around the lower 65s to kind of get that value area low long a little bit higher. So that's kind of crude, still in a range, still trading very much in the wider range that is kind of 71s down to 63s, I guess, the new bottom of it. But we'll see. We'll see how it evolves in the early part of this week. Maybe I'm going to take a crude trade. I always say that every Sunday, and it never happens. But maybe something will finally give me the will to want to do it. And I did see, Jose, I'm going to get to your question when we get to the towards the end of it. Happily, we'll go through, my story a little bit deeper and kind of who I am and how I'm here. It's a lovely story. So we'll get there towards the end, but I did see your question. So I didn't want to ruin my crude flow here talking about this lovely range that we continue to trade in, but I did see it and I will happily talk about that towards the end of tonight's show. So, gold. Still continuing to be so indecisive on if it wants to sell off or make a new all-time high. And I'm not a cran guy, but this is starting to look like a wedge in some capacity. of we're kind of continuing like we were. I know I ran out of data going back to early April because I think this is only like 120 days worth of data. And I do that just so my charts don't die on me or crash on me as I'm on stream and trying to talk long time frame and loading several asset classes with a lot of data. So I do apologize if there is, more relevant things that you're on a longer time frame. If somebody has already drawn and said, yes, this is in fact going to be a wedge that we are eventually just going to get tighter and tighter of a range, because it seems like gold is kind of doing that. If you guys remember the last few months, in fact, I have been talking about the range that is kind of looking to short around the kind of 34.10s, and you're looking to long around the 250s to 300s several times. It just seems like that's the range we've been in. And it just seems like in the last couple of weeks, it's getting tighter and tighter. So in fact, which way is it going to break? I have absolutely no idea. I keep thinking with the bullishness in equities that maybe there might be a rotation out of gold for some reason, and that maybe we might sell off and perhaps go clean up some of this volume that has been left behind going back. I don't have the data for it, but back down here towards the 3150s, in fact, as low as even the 3000s to potentially retest that. And gold just continues to make me look like an idiot and think I have no idea what I'm talking about and doing, and just continues to make me feel like an idiot for not still being long off 2550s going back to November. I will never forget that trade. And I will never forget the fact that I closed it within a couple hours, because I guess that's just who I am. If you get to move that quick, you just kind of take profit, because that's the way I kind of trade intraday. But ever since then, we just seem to just continue to meander between 34s and 33s, 100-point range in gold. And I'm starting to think this is just getting tighter and tighter, and eventually we will break out in the shorter time frame of the next few weeks, likely one way or the other, to the upside or to the downside. For some reason, I'm just betting on it being upside because I've been looking for downside for so long. Maybe that is the jinx that this kind of needs to maybe sell off. No, I just think it's had so many opportunities to potentially shake people out of gold and maybe back into equities, like it looked like it was potentially doing at first, that I'm just betting on if this wedge breaks, it's probably to the upside, because maybe we do finally get a bit of a correction or a cool off in equities, or maybe there is a headline or something that causes us to correct a couple percent in ES or NQ, and maybe that just gives the fear bid that we need in gold to go make a new all-time high. I have absolutely no idea. I've been calling for this 34 to 33 range break. I'm not kidding. Probably for the last 2 months since we've been doing this show. I feel like I've been calling for us to finally leave this range, and I've been looking for it to the downside, and it just never comes. We never seem to be able to leave it. So until we do, I have no interest in trading this. I don't even have an interest anymore in kind of fading the top end of this range and buying the bottom end of it. I'm just staying away until it finally does break one way or the other. It just looks miserable to trade intraday. It just seems like I just never can find a good opportunity to kind of catch one of these trades momentum wise to the upside or to the downside of that range. It just seems like it looks like it's going to finally break like it did a couple weeks ago below 33s. And then what happens? Someone steps right in at 250s and just immediately sends it right back to almost 34s. So that's not the most fun to trade. It just seems like that's what it's going to be I guess for the foreseeable future until something changes. So we've been saying this for weeks. It'd still be cautiously taking profit if you're long up here towards kind of the 3380s, as high as kind of the 3420s, looking to kind of be lightening up on sides if you're doing this on the swing time frame or intraday. That's not necessarily where I'd be wanting to be initiating longs. I still think there is opportunities to obviously trade this intraday, and you could probably still be using something as simple as the previous week's value area highs and value area lows to really guide some of that decision-making intraday, just looking at this for the last few weeks. But I'm hands off. This is the last on the right here. That is the last 20 trading days of volume. And it's basically just a D-shaped volume profile. So nothing to really do there. Just like we were saying in crude, outside of just play the range, play the edges, hope for the best, I guess. But so far, July, it seems like even going back to last week's range, like July's open here, still providing a bit of support with any of the weakness that we kind of got in gold last week. So that's how I'm looking at this. have no interest in trading it. If you have been making money trading gold the last 2 months, I mean, good on you. I don't know how you've done it. So we'll take a look at this. Hopefully something changes. But what's going on in equities? Looks like the buyers are stepping right back in here. What happened? Nothing. Still right around settlement from Friday. Yeah. Oh, that's only like 5 points in ES. Okay. I realized how zoomed in I was on my other chart, and it looked like it was a much wider move back up to the upside. But we'll pause there for a half second. My lovely trading buddy XY has reminded everybody hanging out here on the stream to please press the thumbs up button, hit that like button. It does help me out. It does help out the stream. And I just wanted to get my my influencer quota for the stream done here in the early part of tonight's show. So if you haven't already, please do hit that thumbs up button. I would very much appreciate it. But XY, good to see you. Thanks for hanging out. All right, where was I? Should we take a picture at YM? Trading and balance kind of cooled off and a little bit of divergence from the rest of equities, with ES and NQ kind of continuing to look like they're making a march to a new all-time high. Last week, YM kind of cooling off a little bit. But if you remember going back a couple of weeks ago, we were talking about that breakout trade where YM was kind of lagging the other indices, and it just seemed like it was a little late to leave balance and that there was that great trade. Now, seems like we're back into kind of the top edge of that old balance, and it's basically right at the point of control for the last few weeks. It very much seems so. Kind of in the center of this last couple of weeks of profile or volume here. So we'll see. Kind of interesting, the divergence there. Just wanted to point it out. But I'm not about to become a YM trader this week. So, but since we've been talking about it randomly, just kind of always like to take a picture in the longer time frame and just see what's going on in the old YM. One of these days, maybe we'll throw on the Russell too, but something in me just only is allowed to press the red button on the Russell. Kind of the opposite of trading crude oil, where I will only try to initiate shorts in YM, or excuse me, in RTY for some reason. When will OFL be available for Ninja? It is available on NinjaTrader. That's exactly what this is. So if you have interest, there is a freemium edition that you can deploy right into your NinjaTrader environment today. There's a freemium edition on the website that'll give you access to the, it is. Yes, it is, because these are all the order flow labs tools. You can even see the graphic right here. So you should be able to gain access to their at least their freemium tools free of charge on the website. So if somebody smarter than me, I don't know if Leo or anyone else is hanging out, but someone else might be able to answer that better. But you can get access to these tools on NinjaTrader. Yep, you have the free version. Then you should be able to follow the instructions that you might have been given as far as how to access the studies and add them to your charts. What was I doing next? Totally blanking. Oops. Oh, yeah. Sorry. I was going to go to earnings. All right. So, as I was kind of alluding to early in tonight's show, well, earnings season is back with a vengeance to kick us off here. I know we had the banks kind of leading us off in the previous week. Well, now if you are a single stock trader, this is about as good as it gets as far as major names, single stocks that some of us probably own in our long-term portfolios. But just about everybody and anybody is reporting this week with the major event. I believe I said it was Thursday. It's actually Wednesday, so apologies there. But A number of large names kind of leading us off with Verizon, Domino's in the early part of this week, Lockheed Martin and Coca-Cola in the early parts of Tuesday morning, and then the big names in tech. So we will have SAP after the close on Tuesday, and then the main event being these 5 names here: Tesla, Google, ServiceNow, IBM, and Chipotle, who still to this day is, I don't have a good short thesis in Chipotle. I've made this joke before, but I don't know who's eaten there recently. I'm not a fan anymore. It has drastically changed from my teenage years when Chipotle was, this hot and up and coming stock that my dad still kicks himself, I guess, that he wasn't listening to his teenage sons that played football and were eating these burritos and burrito bowls several times a week. And he missed out on that historic run. So, but still to this day, I don't get it, because I mean, maybe just me being a trader now and, not spending as much time in, the office world and grabbing lunch intraday. But even when I was in kind of the pre-COVID, post-COVID world, when I was going to an office, I stopped eating there a long time ago. And I guess I don't get it. And then I had it recently. I was like in the last couple months, I was working on my sleeve, and my artist wanted to order it for dinner for us as we were continuing that session. And it was one of those like moments where I'm like, yeah, it doesn't hit the same as it used to. So I don't know why I'm so in the weeds on this right now, but for some reason, every time Chipotle comes up for earnings season, I just think about it, and I sit there and I see the valuation, and I guess historically, I don't get it. Clearly, people are still eating there. Clearly, the stores are still doing tremendous volume, but I don't get it because I don't want to go anymore. I have no desire to eat it anymore. It's just not as good as I remember. So that's my short thesis. It's not as good as it used to be, which is not a good short thesis. But anyway, your major names: Tesla, Google, reporting after the bell Wednesday, will 100% move NQ and ES, as they tend to do just about every single week. If not every single week, every single quarter when they report. So if you are going to be trading after hours on Wednesday, please remember, be aware, they are reporting, and they will absolutely rip your face off or steamroll you to the downside if it happens to be that poor of a reaction. Always will move NQ after hours. So if you are a single stock trader, place your bets. Hopefully you don't get absolutely destroyed by theta and volatility crush this week. But fun week. Southwest American Airlines reporting before the open on Thursday. And then the biggest fumble still to this day in the chip race is Intel reporting after the close on Thursday. So will be a lot of fun this week. If you are a single stock trader, plenty of great names to get excited about. A number of names I'm sure a plethora of us are holding. So cool week. Going to be a lot of fun to trade in and outs of this and some of these announcements in the pre-market as well. So keep us on our toes a little bit, but should be a fun week. Lots going on. And then leading us into the economic calendar, super light day on Monday. In fact, we really just have a 3 and 6 month bill auction at 10:30 Central Time. And then the main event going to be on Tuesday morning in the pre-market. Jerome Powell, our lovely, soon to be, I guess eventually will be no longer our Fed president in the new year, it seems. But anytime he still hits the airwaves, it still does tend to move the market. So do be aware in the pre-market, we will have Jerome Powell talking. So if you are a pre-market trader, could be some good volatility, could be some absolute chaos in the illiquidity until the actual RTH opens. So be aware, he's talking pre-market. I don't know exactly what this engagement is, if it's a actual remarks on economic policy or if it's something that's going to be a non-event. But anytime he talks, things do happen. So be aware. And then after that, pretty light morning, just Richmond Fed Manufacturing Index. And we'll have Bowman speaking at lunchtime as well. Going into Wednesday, we will have existing home sales as well as crude inventories for our crude traders out there. followed by the one that seemed to move the market poorly a couple weeks ago. But once again, another bond auction. We will have the 20-year at noon on Wednesday. Looking into Thursday, we will have Chicago Fed's National Activity Index, coupled with initial jobless claims and continuing jobless claims. And then shortly thereafter the bell, we will have two more gotchas to keep us on our toes with the S&P Flash PMI, as well as a new home sales between 8:45 a.m. and 9 a.m. Central Time. So I always hate when they do this. These are my least favorite data releases that are 15 minutes and 30 minutes after the bell. Just keeps me out of trades as I'm kind of waiting for the dust to settle after the RTH bell. It just kind of gives me another reason to sit on the sidelines and wait for things to settle if I can't see something happen. It also just shakes me out of trades. Even if I'm in one that's in profit, it kind of gets me to lighten up as we get closer to those releases. So I always hate these, especially somebody that basically trades initial balance and then kind of goes and touch grass. I hate that. Oh, and then we will have a 10-year tips auction as well on Thursday at noon. So some fun stuff. Friday, pretty light. We will have durable goods and a Baker Hughes rig count. So for our crude traders, Baker Hughes at 12 o'clock Central Time on Friday, but really just durable goods in the pre-market on Friday. And we get a pretty clear, all smooth sailing from there for all of our traders out there. So pretty light week, no major events, not a lot of Fed speak. So a couple things to keep you on your toes in the pre-market with Jerome Powell on Tuesday, but for the most part, light week, a couple bond auctions, but nothing we haven't all seen several times before. So yeah, that's the week. A lot of earnings after the bell, pre-market, but for the most part, just another summer day in paradise. I am ready for the summer trade to be over, for volatility to return to this market and volume along with it. Hopefully the end of July, early August seasonality kicks in. We get a little bit of a window of weakness, perhaps speeds up the tape a little bit, gives us some volume back into this, gives us some volatility, some fun things to trade into August and September. I'm kind of on team seasonality right now, that hopefully that volatility returns a little bit into August and we get some trade. I'm very much tired of the summer range bound drift higher price action that I'm sure we all are. I'm sure as traders, hopefully I continue to do well in this game and can just take part of the summer off and take the much needed vacation that I haven't taken in the last few years, as I've been continuing to try to survive and build this new career path for myself. So hopefully I don't have to sit here and, of course I'm going to sit here because I want to do the show with you guys, but don't have to sit here and slug through the summer price action. Maybe not next summer. Maybe I'm going to just take some time and actually enjoy myself for a couple weeks. I feel like that'd be good for me. One can dream, huh? But yeah, we've now reached, we got a few minutes left here in tonight's show. So if there are other questions, I'm going to talk a little bit about, my background, how I got into this, because that was Jose's question. And I wanted to make sure I gave him some time to actually, talk about my story a little bit for those of you who haven't heard it before as well. But in the meantime, if there are other questions, if there's anything else you want me to talk about this evening, feel free, throw it in the chat. We'll have some more time, but I'm going to talk a little bit about my background and how I got here too. So for those of you who don't know me, I'm Nick. I am a full-time trader. I got into this game, I always traded a little bit in the past, basically was long only, got into futures in kind of 2020, 2021, kind of at the end of that, whatever you want to call that blow off top froth of a 2021 that we were in. Kind of got bit by the actual day trading bug during 2020, during kind of the COVID volatility. But always kind of had a passion for trading, did it on the side, had things like restricted stock units and stuff like that when I was working my true 9 to 5. My background very much is in the kind of tech Mag 7 world, where I worked for a number of years, did business development, sales, consulting for a number of companies there, and ended up being part of the kind of first round of 2023's layoffs. So in early 2023, I was laid off of my golden handcuff tech job. And while I was basically going through interview cycles, I kind of discovered, trading through, in the past, I'd always still traded futures through my own personal money. But given that I was just fired basically and, had to find another opportunity, another way to make money, I kind of dabbled a little deeper into trading and used things like prop firms and things like that to kind of, how do I describe this? I guess not put as much of my own personal capital at risk when you have no true other income coming in. So got more in the weeds with that. And at the time, I still didn't really know what I was doing. I was just using trading intraday to kind of pass the time between interview cycles, and ended up getting an offer from a large company within the Big Four consulting world that ended up getting put on ice as they did a round of layoffs. So basically I had an offer. They eventually accepted, they rescinded it. And it was kind of around that time I started to hit my stride a little bit with trading intraday and doing this full time. I had obviously survived probably a good 6, 7, 8 months almost, going through those interview cycles and trying to find another role before one I thought had come about and that I was going to take and was going to get out of the cycle that I was in, which was kind of having to trade to survive and continue to pay my bills that way. So like I said, at the same time, I had done this long enough and started having success with it that, in a weird way, even though I was accepting a role, it had basically replaced my old 9-to-5 income, or at least was supplementing it to a place where I felt comfortable paying my bills and surviving off of it. And then fast forward, time from there, obviously job thing didn't work out, but was getting more involved with the online community and streaming and the trading friends that you guys see me hang out with on Trade the Close, and kind of weirdly dipped myself into doing this in front of people and having people watch me lose thousands of dollars at any given time live on YouTube for free. It's an interesting world, but now I am much more comfortable in this little game of trading full time. I don't recommend it to anybody, especially the path that I kind of went down, as far as kind of having to do it to survive and basically do it until it works. It's not exactly the most glamorous career path, but it worked out for me. I also did this, I got laid off right as I was getting married, and I was paying for a wedding myself out of pocket. And shortly thereafter, doing this full-time game, had my first kid. And luckily I have a spouse that is very supportive of this chaotic, crazy journey and is happily allowing me to sit up here and hang out with you guys on a Sunday night. And, this has been a fun journey for me. There's a weird way where doing this in front of people has added a layer of accountability for myself, in a weird way, kind of even being the small circle of the internet that I kind of exist in, doing this show and doing the streams with you guys. That little level of accountability had made me a better trader doing it in front of people. It taught me risk management really quickly, because nobody wants to just blow up their account in front of thousands of people on YouTube. So naturally it's kind of evolved. I've, gotten better at this game. I've learned how to survive and thrive at times, doing this. So it's been a lot of fun. We'll see if this is the forever career path for me, if it's always going to have a place, no question, no matter what life kind of throws at me going forward. Obviously things evolve when you start a family, and, I have a wife now that is going to be a full-time mother and not go back to work. So naturally there's a lot of pressure. There's a lot of things that evolve in this game outside of just the normal mental of, being able to make or lose thousands of dollars in seconds. So I've continued to have to evolve my mental game in this. Luckily, I think for as dumb as I may seem at times, I do think I am a relatively level-headed and smart individual, just based on the career path that I was on before this. So I've used a lot of things that I did in 9-to-5 to kind of craft, how do I do this day in and day out and be successful at it? So it's a fun journey. It's tough. This is a horrifying game, I gotta say. At times, being a full-time trader, the drawdowns are real. That's real money that you kind of need to live and survive. So But I wouldn't change anything. This has been a crazy couple years. I've very much enjoyed it. I'm very thankful to the community of people that have supported me, offered me advice, offered me guidance, trading help, psychology help, everything else in this game that you kind of need to be successful. So I appreciate it every step of the way. It's been a little crazy, but it's been a lot of fun. I don't miss the golden handcuffs at all. I got to say that. I don't, in the weirdest way, like, I don't go to sleep like thinking about all the projects and deadlines and things. Like, the autonomy that this has given me, the ability on Thursday and Friday to be a full-time parent is kind of amazing. And, I wasn't putting capital at risk, but I had already had a good week so that I feel comfortable, like, not even pressing another button for the rest of the week. But being able to spend as much time I think I have in the first, 8+ months of my first kid's life, I don't think I would have ever gotten that in the 9-to-5 job. So it's super awesome that this career path, if I can call it that, has allowed me to do that. So it's been a lot of fun. Hopefully it continues to, grow. I've had a great first half, like looking back through July, like I've had a great year so far. And I kept myself out of trouble all summer trying to, in theory, look for a longer time frame move, and just knowing that this is a lot of range bound activity that you typically get in the early parts, but in the summer trade. So part of that is just maturity in this and doing this for a few years now, and knowing when, like, being a intraday day trader, when volatility's there, it makes sense sometimes to press it and really kind of sitting there day in and day out, RTH open to RTH close. And there's a lot of times in the summer where the mental capital is not worth the potential financial capital. So sitting there and getting just grinded in range bound activity, I've just matured a little bit this summer. And, I hit my first trade, I can call it a day. I'm not going to spend the whole day looking at charts if I can avoid it. So that's kind of been, I think, my adjustment this year, which has helped me do tremendously better to not be in a drawdown in June and July, and be in a good state, in a good mentality heading into what is hopefully a good traders market period between August and October. So we'll see how it evolves, but I know I'm a few minutes over, but I appreciate everybody hanging out with me here this evening. We'll do a quick recap of ES and I will let you all get out of here. As I said, we are still very much in the summer trade in balance. And for the most part, I'm not looking to get too bearish outside of intraday scalps unless we can break my big, beautiful blue box here. Oh, look at that. I made a Trump joke out of nowhere without even trying. Big, beautiful blue box. That's what we're going to call it, to coincide with the big, beautiful bill that was on the airwaves for months. So looking at this, I am looking for any sort of reaction in this area, these 63.40s to 63.35s. I'm looking for potentially sellers to step in there and hold us firm, reoffer, whatever it is, but potentially looking for a short there. And at some point this week for the traverse of value, at least down tier towards the 63.10s, if not the 6300 evens. So we'll see. But that's kind of how I'm looking at it. Not looking for a massive wide range move, especially with Mag 7 earnings on deck. I would expect some, as we've seen many times in the summer trade, just slow, kind of retest the previous weeks or going back like some of the previous week structure a little bit. And then perhaps the dip buyers step back in and we make another move back up higher. But this is in at least where we are trading now, where settlement was, how OPEX week kind of closed, at least in the early parts of this week. I'm kind of going to be using this little low volume node from the previous week here as a bit of a short time frame pivot. I want to just see who's in control below or above that 63.35 to 40 spot to kind of see, am I on the right side of momentum at the right time? So that's the prep. Let's have a good week, guys. Everyone trade safe if you're going to be putting capital at risk in what is likely going to be this lackluster Asia Open here in the next hour or so. But it should be a fun week. We've got plenty of earnings to keep us on our toes this week, a light week as far as data releases, but let's have some fun this week. Everybody trade safe out there. The crew will be back this week. Please do tune in tomorrow morning. The full NinjaTrader crew will be back to give you the pre-market analysis that we all need and look forward to start our trading day. But everybody have a wonderful rest of your Sunday evening. I very much appreciate you guys hanging out with me, spending a little time on your Sundays to get prepped, get ready for the week. But please do, everybody be safe out there with the rest of your weekend. Have some fun if you haven't. And let's attack this week. Let's have a good one. Take care, guys.